All right, good morning, everybody. Hope you guys are all having yourselves a fantastic start to the AM. Happy Tuesday, right? Tuesday, April 9th. Hope you guys are doing well. A few things for us to talk about here right off the bat, right? We have a little bit of an economic calendar here for us to worry about. I can't find the tab, a bit of a mess. Oh, there we go. So today, right, fine, nothing too crazy, but then tomorrow, core CPI, we got Fed minutes, right, and then we got a lot of Fed speak here from Bowman, Goolsbee, and then we have the Fed budget here at 2. Yesterday's volume profile certainly suggests that the market is waiting for something, but maybe we could get a little bit of action prior to that happening. From a trading perspective here this morning, spent a little bit of time yesterday thinking a little bit about or kind of not thinking, kind of back testing or looking at some of the market conditions that we've seen here recently, and oftentimes it seems like the retest of the opening range maybe is a little bit of a better entry for us than a kind of like blanket breakout or things along those lines. So we'll talk about that a little bit here this afternoon and this morning, if we do get sort of appropriate price action to satisfy those kind of conditions. But I think there's a way that we can use the opening range area as sort of an entry spot, and then setting the stop loss slightly differently than we have so far. Now, I'm not sure if that needs to necessarily be the immediate reaction here, but if we're going to be getting a little bit of a choppier market, that might ultimately end up being the slightly more profitable edge and will allow us to still kind of maintain that really tight risk structure that we love to focus on here inside the room. So we'll chat about that as things are setting up. We'll kind of walk you guys through that in a little bit more detail as things are coming together. But that's, just one thing that's kind of top of mind here for me this morning, seeing if I can kind of continue to optimize this to maximize basically P&L. So with that being said, right, good morning, Suresh, Igor, Jay, John, Gary, Salstein, Craig, Topher, Jose, Steven, Brian, Ruben, and Michael. Hope you guys are all having yourselves, Gabe, sorry I missed you there. Hope you guys are all having yourselves fantastic mornings. And yeah, let's start mapping things out here a little bit and figure out what we want to do. My words are kind of ahead of my brain here this morning a little bit, right? So we are gapping up this AM. So let's start mapping things out and figure out exactly what the plan is. So let's start things off, right? Yesterday, inside bar, decreasing volume, honestly a pathetic volume standard there yesterday, right? Some of the lowest volume we've seen in a very, very long time. So not exactly a strong indication of particularly trending price action in either direction. My objective here today, right, is to hopefully identify or reclaim momentum back in the market. And then, right, we can look for breakouts or breakdowns in either direction. I would say that I have a little bit of a bullish bias here, right? And would still look for moves to the upside versus moves to the downside. I'm not seeing as much enthusiasm for a downside play, but we'd like to see if just consistent market momentum can show up here at some point and then push us higher. So inside bar, right, you can look for breakouts in either direction, but the bias or the easier trade is probably to the upside. Hey, Dayon. So it's going to have slightly different standards, right, for what we're willing to call bullish breakouts and bearish breakouts, right? So for bullish breakouts, we just want to see bigger volume than what we saw there yesterday. For bearish breakouts, we need to invalidate the kind of fake out lower that we saw on Friday. So we need to see bigger volume than that standard. Okay. QQQ, what's the count here? It's a double what? Any thoughts here, guys? Any thoughts? Yeah, Jay. Basically, it's a 1 for 3, right? Or inside bar. You have a 3 for 3 or a 2 out of 3. So you either have strong trending conditions, right, where price, volume, and yesterday's price all telling you the same story, or you have, right, versions of relative weakness compared to that. So if you want to get that in a little bit more detailed, there should be a video in the Discord that breaks that down. But that's essentially it, right? So you're looking at 3 elements: the candle, the previous daily volume, and then today's current price action. When all 3 of those elements tell you the same story, you have a greater indication of trending price action. When you have only one of those elements telling you the same consistent story, then you're probably looking at kind of consolidation. So I don't know why no one's answering here, but it's a double inside bar, right? So we've got back-to-back days of consolidation inside Thursday's range, and we haven't seen a breakout or breakdown, right, in either direction. So I'd like to see a resolution here or a breakout from, say, Thursday's range prior to being particularly aggressive. Okay. Apple, let's count. Pretty weak volume, right? Red candle, gap up. So what would that signify? Yeah, it's be a 1 out of 3, right? 1 out of 3 here to the downside. So we know that bears aren't particularly strong, and now we can define what strength would look like, or, right, what strength would look like to the upside. Now, to the downside, we kind of have this 168 already mapped out as sort of that pattern breakdown. So we would like to say that we can maybe get a creation or the start of trending price action if we could lose that trend line, and if that volume profile stepped in to be bigger than anything we've seen in the last couple of days, right? If we're now going to be bullish to the upside, well, we probably want to overcome maybe like that 171, 172 area to finally get bullish and kind of break out above sort of this upper trend line. So within that context, right, or, kind of indecisive or choppy, or we'll call it not very clear price action, kind of coincides with Apple sort of, consolidating inside this wedge. So if we could get a breakout or a resolution from this narrative, then it'd be a lot easier for us to build up some conviction and hopefully push things higher or lower. Right now, I keep saying, have a bias here, right? I've been swinging an Apple position here for a while. It's not really moving. It's not really doing anything. So at some point, we'd like to see some kind of move higher. But Apple's been quite the laggard on the index level. Would like to see that leg eventually stop. So maybe from a risk-reward perspective, right, the easier trade is to the upside. But a lack of clear trending conditions, so minimal reasons to be very aggressive. All right, Tesla, what's the count? Higher high, higher low, normal body bullish candle, gap up, decreasing volume. Right, so we've got trending conditions, but not exactly a strong version of trending conditions. Yeah, spot on, DCS. Right, so we've got something. I'm going to get rid of this. This drives me crazy. Yeah, so 2 out of 3 here, guys, spot on. But we don't have a very strong volume profile, so we'd like to see big volume step in. Within context, you know, that Friday bar kind of telling us a lot of dip buyers there, so maybe we don't need to go bigger volume than what we saw on Friday. But if I can get increasing relative to yesterday's standard, then that would be a good indication that we have some momentum back in play. From like a breakout perspective, this is where things maybe get a little bit spicier. I think I could probably look for like a 175 pop, and then you have a pretty clear path of resistance here. So we go 175, then it goes 176.50, then 177.50. Right, it's about there, and then that next point of contact's 180. So I'll go 179, 180, and then from there 182, 185. So again, you can go buck along the way. Do we have any downside narratives here? Can we play stories lower? What would that sort of thesis look like? So in theory, right, we could play a like Bollinger Band reversal or something along those lines, but we need to make sure that we're not only overcoming, right, basically that volume standard we saw there yesterday. If we are going to play a reversal to the downside, we need to see bulls fail in some context. So a fake out higher and then breakdown, a volume divergence reversal, an MA cross, right, something that signifies a change in trend or a change in character that would allow us to push lower. So purely a volume thing's not going to be enough. You need also some extra catalyst, right? A green to red reversal type thing to really have conviction that bears are now back in control. Okay. Again, bias is to the upside versus to the downside. Okay, Microsoft, higher high, higher low. It still needs to get up and over that 429. Nothing has really changed here. We're a little bit closer today, so we're about, 1% away, 0.75% away from getting that breakout. So could be in play. But yeah, this is a 1 for 3 here, so no indication of trending price action. We'd like to see the trend get reestablished, and we're going to say that it's trending PA if we can break out above that 429, potentially 430, to then push us up to that next level. So a little bit of a ways away, but we've got a plan. Okay, Meta, what's the count? Yeah, 1 for 3, right? Higher high, higher low, a little bit of a fake out through all-time highs. So maybe less optimistic that this is particularly strong here this morning. I would like to see a high conviction breakdown or breakout in either direction, and I'm not sure if I'm really in play for that to happen, right? If I'm going to be chasing a breakdown, it would want to be more of like a gap fill type setup, and if I'm going to be playing a breakout, right, it needs to be back and over sort of those all-time highs. So this looks like one to watch versus one to trade. Okay, Amazon, what's the count? Higher high, higher low. Right, so red candle, decreasing volume, gap up. We're not really getting a strong indication that bears fully reclaimed control there yesterday. Now, we also don't have a ton of evidence that bulls are particularly strong, besides the sort of individual characteristics of that candle. So we need to do two things here, right? We need to overcome yesterday's highs, and we need to overcome yesterday's volume standard if we're going to argue that bulls are back in control. Otherwise, we're sort of being told that we have maybe a little bit of weakness, a little bit of indecision, maybe some consolidation to worry about. but not really a strong indication of kind of trending PA. So we want to see that momentum show back up and kind of be aggressive prior to us taking any action out there. Now that 189 barrier, we talked about this yesterday. I'm not sure if I need to change that or want to change that, because we're looking so far to our left here that I think it's going to be more valuable to be a little bit patient, as we've seen price action basically just mostly reject above us versus find support. So if I could get that basic breakout over 189, establish kind of a path towards that cycle level, then that could be a little bit of an easier trade for me. So I think, again, short term here with this Amazon, maybe a little bit of a day or two away from being particularly tradable, or waiting for that big news narrative to sort of resolve itself. Okay, AMD, what's the count? Any thoughts, guys? Any thoughts? Yeah, so it's not a double inside bar, but it is an inside, right? Because this one, the Friday candle did make a slight lower low prior to breaking out. But essentially, we're being told that we have indecisive price action or consolidation price action at lows. Now, all things considered, right, we're at the lower end of the Bollinger Band, so I may be a little bit more, I have a bit more of a bias maybe to play towards playing breakouts here to the upside. But I don't want to be particularly aggressive here until an indication and then we can kind of go from there. So I would need to see a high vol breakout up and over before I'm willing to do something crazy. Maybe a 173, like I could probably talk myself into that. But what would have to be the volume then if we're breaking out through 173? Yeah, bigger than Thursday. You're spot on, Joel. And then we're looking 173, and we can basically target Thursday's high, right, which is 183. So we'll go buckle along the way up towards that barrier. Okay, and then to the downside, I think I still want to see that 156 break at some point, because I see too much dip buys, too much dip buyers, too many dip buyers. There's the combo I'm looking for. Too many dip buyers inside this lower range. So I'm not really, I don't think I'm going to get paid to be aggressive here to the downside yet. A little bit of a pretty significant move lower in the last, say, month or so. So at this point, I'd rather, or the better risk reward is probably for the relief bounce than the kind of big flush. Knowing that tomorrow, right, is Fed minutes, CPI, whatever you want to call it, and all those sort of variables, do we expect that today is going to be the biggest volume day of the week, or could we anticipate that that maybe isn't the most likely narrative? Yeah, potentially a little bit trappy, right? So if there's a lot of, news stories there dropping tomorrow, right, then maybe the trade here today is more of a positioning trade, right, for the big players versus a trend creating or trend continuation, as tomorrow's data could almost like change all their calculations. So we don't want to front run price action here too aggressively this morning, but we want to define what that aggression should look like if we do get it. So it's not to say that we won't get a setup here today, but I think if we're going to be looking at something like an AMD or one of the other names where we need to overcome Thursday's volume standard, that might be a little bit of a more challenging barrier for us to overcome. So from like a watch list priority standpoint, right, maybe something on the index level would be an easier name for us to trade than something that requires like kind of outlier among outlier volume to be tradable. Netflix 1 for 3. It's a lot of the same shit we've seen here so far today, right? Indecisive price action opening up in the middle of that range. It's not really too much is changing here. We'd like to see a breakout over 640. If we can, then sweet. If we can't, then I'm on hands. Okay, Google A class. Getting a little breakout up and over here. All-time highs. How do we feel about big gap ups on low volume? Right, so generally a big gap up on a decreasing volume profile is a good opportunity for people to take profit, right? It's a great spot for people like, oh, I kind of, I'm not going to look a gift horse in the mouth type thing, right? So they're going to take their profits. We might see a pretty deep pullback here this AM, but we don't want to front run or be too aggressive in either direction. We want to see big momentum show back up prior to us being aggressive and prior to us thinking that all-time highs is now going to act as an area of support. So, big gap up above all-time highs, on weak volume. If I swung this trade from a couple days ago, 100%, right? Great spot to take some profit. So I would like to make sure that basically we aren't getting trapped in profit taking. And then from there, right, there's a lot of space higher to push price action the way we want. Like we said, right, we're at all-time highs, so who has kind of reason to sell if we can find enough buyers at these levels. Above that 157, I would say we got like $6 worth of space here reasonably today. That would give us $10 of kind of consistent follow through here from yesterday's close, give or take, and that would be a pretty big move on something like Google. So that's about it, guys. I'm not sure if I see too much else out there here this AM. We've got a couple minutes, so if you guys want to or have any tickers that you're going over and you want to go over them, please pop them in the chat here right now. But otherwise kind of expecting a few names to maybe give us an opportunity or two, but it shouldn't be too incredible. I mean, a lot of the same thing that we talked about there yesterday, right? You need to clear above sort of that rejection area or hold above that rejection area prior to making that move. You had a big climb here recently in oil, so I'd anticipate a couple periods of consolidation prior to it breaking out. Anything else here, team? Anything else? All right, everyone. Just type in VIX. All right, everyone listening on Twitter Spaces, appreciate you guys tuning in. Hope you guys have yourselves a fantastic trading day. But yeah, just make sure, right, you see volume step in and you don't front run narratives here too aggressively. If you can get those combos to sync up, should be a successful day. If not, be patient, sit on hands, and don't waste any of your money. I'll do the same thing here again tomorrow, starting at about 9 a.m. So hopefully you guys all tune in then as well. Peace. All right, DTR members, I'm just going to make myself a quick cup of coffee here and maybe get myself a glass of water for my voice. And we'll do a quick little, or hopefully we'll find ourselves a strong and successful trading day. All right, guys, so let's see how the day wants to shape up here, right? We're not going to force anything. I'm not going to rush anything. I'm not going to do anything stupid, right? My goal here above everything else is to find that nice A+ high conviction setup. And then go from there. Like I said, guys, right, there's maybe an opportunity for us to do like a retest entry here on the ES. And the way that that would work is you place your stop loss as the midline of the opening range. Whoops. So what we would do here, right, you said that midline would make it, I'll say red, make that bitch thick. And then, right, you'll see here, middle, okay, you get that high vol breakout here through, entry on the retest step, stop on the midpoint, and there's no way that on that retest, right, you're not getting 2R of what that risk is, or approximately 2.5 points of risk. Same thing here, right, high vol breakout, pull back, right, find support off the opening range, and then it runs. So a lot of those examples, right? Breakout, pullback, run, right? Breakdown, pullback, breakdown, right? Breakout, pullback, go. So, there's a lot of opportunities where that kind of price action, seems to almost like shake out people on the initial move, and then it gives you a good chunk of follow through. So if we can start to see that pattern occur a little bit more often, that might ultimately end up being a better combo or a better risk reward entry for us to take advantage of. Like consistently getting 2.5 point stop losses or 3 point stop losses allows me to be very aggressive with my position sizing, and I could see pretty some upside there to get 5, 10, 15 points right on some of those moves. So definitely a little bit of potential. Kind of saw that pattern there yesterday. We'll see if it plays out, but definitely looks like we could get a little bit of joy with that technique in general. Okay, making a move lower here. 30 seconds on this opening 5-min bar. How do we feel about this volume standard? For saying we wanted bigger than Friday, are we there? Like if we wanted to be bearish, are we there? Yeah, it's close, but it's not quite there yet. We have a bit of work. I'm going to say it probably didn't achieve the standard we wanted. So if that's the case, right, we're probably not going to trust this yet. But we'll see, right? If we can get good separation here on a breakout, then an entry on a pullback back in, give us a pretty nice stop loss, right? 3.5 points, something along those lines. Yeah, it's a pretty big bleeder. The most likely, well, maybe not the most likely outcome here today, but we definitely have a big expectation that markets are going to be a little bit sticky, right, prior to these news events. Anything Fed, right, if it ever says anything Fed on the calendar, that tends to slow things down. Okay, right, so we've done a pretty good job here. ES didn't give us the volume we wanted, so it became, well, still so far easy to avoid this. Hey, Samuel, are you in the stream by any chance here this morning? I'll keep an eye on the indexes here still. So is this your retest opportunity maybe? I think it might be still a little bit aggressive here. But this is a good example, well, not a good example of, I think, an A+ setup, but a good example of why maybe this will make our risk so appealing in this kind of context, right? Your stop loss here, I'll call it 5 points. So a 2.5 point risk allows you to be very, very aggressive, right? And to think that we could get 4 points of risk, right? 5 points follow through, something along those lines, that makes things a little bit easier for us to stomach, I think, from a risk perspective, and gives us a lot more buffer in our trading decisions. Even on, it might give us more opportunities to trade these on the longer time frames, right? Whereas on like a 15-minute time frame, maybe historically, a breakout candle would be like 10 to 15 points. Well, now we could kind of have that, right? And have like 5 points of risk for a 15-point move. And again, right, those ratios start to make a little bit more sense. So hopefully that makes a little bit of sense to you guys. But that would be sort of how I'm looking at it. Maybe it was the entry. Probably a little bit aggressive, probably would have been. It's not great confirmation, right? Not enough vol. Right? 5267, right, would have been your 1 hour move. That's pretty reasonable, right, to think that that's our spot where we de-risk. So from just like a math perspective, right, that's it's very probable, right, that you can get that kind of payout. Let's put it that way. Does that make sense to you guys? Perfect. There had been your 1R. And then 2R, right? About 52.65. And then 52.60. It's how much, right? It's 4.5R. So we're actually getting a better risk reward that way than we would getting or using the fibs. Pretty interesting. Hey, Rusty, how's it going? Okay, and there's your 2R. Yeah, I like this, guys. I like this. So here you have a possible opportunity for a retest. So you'd be looking around 52.67.25. Right, stop loss would be the midline, so 52.70.75. 14 ticks away. Yeah, on the retest here. So either, I would say probably on this one would have been better. Right, because this is kind of confirmation that it held. Let's go, Rusty. Nice work. Okay, there's Tesla. Oh, headphones are falling everywhere. If you need big vol on Tesla, we have a chance, for sure. So yeah, breakout, hold, retest, go. Right? That's kind of the basic idea here. Right? Breakout, hold, retest, go. Right? Breakout, maybe not the best hold, right? Fail. Breakout, hold, retest, go, right? So we're looking for that pattern to basically replicate itself. Seems like before a move happens, it tends to shake people out, and then it finally gives you a bit of a pop. So it gives us just potential, right, to catch things. Classic, this is how it moves now. I'm looking at my OBS. The settings look okay. I don't see any issues. My settings appear to be okay, at least. It kind of works with with the Google too, right? Breakout, retest, go. I would need to back test that on equities. 954. It's really oh, there's a big chunk of me that wants to buy these lows. Big chunk. The reason, guys, why I'm not was because yesterday's foundation was an inside bar, right? So you don't really have that much evidence that dip buyers were kind of supported and, kind of found their oomph here. So buying a dip buy here would be counter trend, counter thesis, right? Counter the plan, which is why I'm not doing it. And a good reminder over why I write down my plan on my chart, right? It's kind of hard to ignore it. It's kind of staring at you in the face, unfortunately. Right? We just know that when we don't have that volume shelf or volume support to find dip buys off of, it's hard for us to trust that those lows are going to hold. So it would be essentially the equivalent of trying to catch a falling knife, right? So I have to have the ability to basically talk myself out of it. And I was. Maybe Tesla on the 10 or 15 could be in play. Yeah, it's close. Okay, 10 a.m. or just about. Oh, fuck, I forgot my coffee. Oh, no. Is anyone else having any issues? Yeah, I would still need more volume though, right, to trust a double bottom, Mike, because fundamentally a double bottom is a dip buying setup, right? But I only want to look for dip buy setups when I have a volume shelf to support it. Even if that pattern does show up, I don't fundamentally have that volume shelf. Right, so it's the wrong setup for the current market conditions. Oh, I'm a pretty basic coffee drinker here, unfortunately, Gabe. I do iced coffees when it's not miserable, just like a cold brew. And then today, it's not that nice yet. I just got like a Keurig machine. Tesla could be in play here in theory. Targeting what? 177.50 at this point. So you would need an entry 174.60 or better. Higher high. Okay, look, a little fake out lower, right? It doesn't hold. Oh yeah, Mike, like in reality, right, there are unlimited amount of ways to trade and an unlimited amount of ways to interpret the data that you use. So, Brooks Trading, awesome. If he doesn't want to use volume, no worries. Doesn't mean that his edge is crap or that mine is better. But no, like when I learned how to trade, I learned how to trade using candlesticks and volume. Those were the sort of concepts that were made very, very important to me from like just like a strategy building perspective, and then the risk management side of things, the psychology, all those sort of variables then had a chance to sort of take root. So in reality, right, the strategy that one teaches is a kind of result of a lot of survivorship bias. So, if I find the technique that works for me and I've been trading it, X, Y, Z or this way for 10 years, well, I'm going to teach people what I think is best because that's what's worked for me, right? So yeah, there's really no issue if people want to use volume or not. But the way I systemize my decisions, I need that volume shelf to bounce things off of. Hello, Tesla. So I wonder if they're doing what they did last week, right? So last week we had the big data on Friday. Made things cheap for Friday. I wonder if they're making things cheap for tomorrow morning. It's baseless speculation, but you know, markets tend to rhyme, right? And I say this all the time, but like, I'm a big believer that markets are going to behave the same way they always have until proven otherwise, right? So if we see sell-offs before data consistently, need to see like a pretty significant proven otherwise to not fall for that. What I would say, Mike, to go back to your comment here a little bit, in general, when you have kind of those markets that aren't necessarily backed by volume, I find that the fake out entry is probably the better one if you're going to go counter. So like this entry here right now, having the courage to basically buy that fake out is probably the best entry you're going to get in a day versus like a kind of like clean textbook execution. And to be honest, when that buying the fake out goes wrong, it's a disastrous execution, right? And so that's why I don't like doing it very much, because it tends to it tends to bee sting you, right? It tends to like impulse sting you, punish you for doing that kind of stuff. So it just ends up being confusing over what you end up wanting to do, which is generally when I don't have high volume environments, I want to see high volume, because high volume historically makes it just a little bit harder for people to fuck with your price, right? Like for those traders who have worked institutionally or had been able to basically wipe out an order book, it's a lot easier to do that, right, when you have 10,000 shares versus 100,000. And so when there's 10,000 shares, and just keeping the numbers simple here, I can trap people quite comfortably. Yeah, it's that Thursday range, right? Haven't broken out through it. Same thing across on QQQ, right? Haven't broken out through it. Almost everywhere, actually. So you're spot on, Michael. Right? Even Tesla now just getting above that Thursday range. Microsoft still not up above, right? So if we're stuck, yeah, exactly. We're seeing consolidation, right, within that range. That tells us we don't need to be aggressive, right? Because consolidation, the way that it sort of moves in between points of resistance, it's a little bit irrational, because from my context, right, price doesn't, or it's not very important until it either makes a higher high, right, or it makes a higher low. So we need to see a resolution essentially of those Thursday ranges, or bigger volume than those Thursday ranges, which is why we're willing to be more aggressive on the ES, because we invalidated that volume. But we mostly have reasons to be skeptical, right? We're not seeing the smoothest, cleanest, most impressive price action, nor have we really missed any A+ looks. Sounds good, Rusty. Enjoy the rest of your day, man. And congrats on getting account number 3 going. That's awesome. Is that 750K now? I would need to see bigger volume than what I've seen from any of the bearish candles. So if I got like a reversal bar that was not quite this volume I've seen like at yesterday's close, but if I could get like 2/3 of that, oh, that's epic, Rusty. Congratulations, dude. Yeah, send those certificates in the daily debrief channel. Man, we might just get you a laptop here at some point. Might convert you to being a laptop trader. Basically, the only way I'd be interested in a dip buy here, Michael, is if I saw a volume that was basically suggesting that bears are done. So yeah, unfortunately, so far made good calls to just not waste any money here yet. Tesla's in almost squeeze mode here. No, I'd want to see a high vol reversal, right? So if I'm going to say that bulls are now back in control, I want it to occur on candle 1, 2, or 3, and on volume that's bigger really than the bearish volume I've seen here so far today. So if I could get bigger reversal volume than what I saw at, say, like that 945 bar, and a candle that looks like 1, 2, or 3, then I could start to argue, okay, bears are done. We've overwhelmed their selling pressure, and now maybe there's a path of least resistance to the upside. But when we don't have that volume standard, right, and yesterday was a really low volume day in general, it shouldn't be challenging for us to get more than that, right? Shouldn't be a very difficult like benchmark to overcome. And so if we're not getting bigger volume than what we saw there yesterday, that's probably a good indication that we still don't have that momentum to give us that directional kind of clue, right? So this doji or this low volume consolidation probably isn't a surprise based off the relative enthusiasm we saw off the market open. So although there was pretty decent downside follow through, basically just ate up that gap, and now things have kind of dried up completely. Basically, I'm asking myself, what's the bit or part of price action that's giving me a lot of anxiety? And then how can I basically overcome that anxiety so that I feel good about my trading decisions? Okay, Tesla, no chance. basically the idea here is if I saw consolidation yesterday, which is what an inside bar is, right? And I'm not seeing more oomph than what I saw yesterday, then I'm kind of base assuming that I'm still in consolidation. So I know that's like a little bit maybe frustrating or a bit annoying, but I don't think I've missed out on anything here yet. The only trade would have been this 3-min retest and go, and I'm not sure if that was really a confirmation, right? If that candle, that breakdown candle was increasing volume, I think it's a little bit of an easier argument at that point to say I had a confirmation of separation away from the range. But I don't think that gave me an A+ look. It does seem, and this is just the market fucking with me, but you know, when you try to make a change to be more aggressive in a certain context or to change a certain variable or whatever it might be, market seems to always do the opposite. Like the first couple times you try to wait for that new technique. So it's just funny how that goes. It's unfortunately the way the market plays games with us, right? Because all that is, it's not necessarily the reality of the situation, but we make those changes or we make those techniques or those adjustments, right, to take advantage of the market. And then when it gives us like a version of it, it's like, oh, fuck, I should have. But in reality, guys, right, with these funded accounts, with the leverage that you have, you need one trade a month to make more money than your day job, right? That's it. So, frustratingly, we need less action than we want, but that limited amount of action can outperform, right, pretty much all of our other sources of income. Now, there are some exceptions there, etc. But the market always tries to make you feel like, yeah, like you should get that like instant gratification. It's trying to lure you in to making that quick and fast decision, into chasing, into rushing, into doing whatever. And that's generally not the best kind of thing. Famous, or not famous, I don't know. But a quote that was always stuck with me, that was kind of always kind of pushed to me when I was trading, was that like what feels best for our accounts in the moment is rarely what's best for our account long term. Because for some reason, the second the 9:30 bell rings, it's like we get a little bit of tunnel vision that makes us think that all of our decisions are going to be perfect and correct. And we get this like, I don't know, almost a confirmation bias to find the sort of path that we want. And so it is challenging. It is frustrating sometimes. But if we chase names that aren't perfect or setups that aren't absolutely perfect, It's way more frustrating to then get stopped out doing something that you knew you shouldn't have done. So we're basically trying to avoid that feeling here today so that we can not lose any of our mental capital. Okay, we get a look here, we get a nice reversal. We would have done pretty well. What would have been the trades you took, Michael? Would they have been dip buys, or would they have been trying to rush the flush? Okay, but it kind of sounds a little bit like you would almost chase like a few impulses, right? And so it's not that maybe those feelings would have been wrong or anything along those lines, but I think that you've maybe said that there would have been 3 or 4 different types of setups, or you're not super confident what you would have done exactly is probably the reason, right? The exact reason why you did well avoiding trades. So what we want to always do, right, is profitable traders want to rely on facts, not feelings, which is why I, again, systemize a lot of my approach, right? It's to allow me to basically rely on the facts of my decision making. And so, yeah, like if I can systemize that approach and I can make those things consistent, then all of my decisions, right, I should know like my win rate, right, when I take a dip buy in 3 for 3 conditions, in 2 for 3 conditions, in 1 out of 3 conditions. And because I know that my win rate is, say, 70% when I have volume and 45% when I don't have volume, then it's an easy thing for me to rely on, be like, okay, well, it feels like this should be a dip buy spot, but the facts of my setup tell me that, you know what, I'm probably going to get faked out here. I'm probably going to lose money. At best, it's a coin flip, and I'm not sure if I really want to flip that coin. I don't know if I can justify that upside. So that's kind of how you calm yourself down, right? Or how you answer those anxieties, right? A good thing, right? Double top pattern. It can be an incredible, or double bottom, sorry, right? A double bottom can be a great pattern to maybe play reversals off of, but what's a 3-min double bottoms win rate versus a 5-min or a 10-min or a 15? Those are the questions we want to answer more than almost anything else. Because the idea, right, is that, okay, catching one trade once is nice, but I make money when I can repeat that process consistently. So when I can understand why I took a trade and then understand how I can replicate that again in the future, well, ultimately that is something that I can build an edge off of, benchmark that I can work backwards from, and kind of create, right, a foundation. Trading off of a feeling works until it doesn't, and then when I go back to review my decisions, it's hard to remember or to like think, why did I do this? Why did I do that? Why did I think this was a good decision? Whatever it might be. So back testing and then seeing if our back test matches our stress test is essentially how we become profitable traders. So if I have hypothetically, right, a 50% win rate on a back test on a dip buy when I don't have a volume shelf, but in reality I get a 30% win rate in my stress test, it's not worth the effort, right? It's not worth the time. It's not worth the stress. None of those things. So that's how you slow yourself down, right? That's how you create the evidence for yourself to talk yourself out of trades, is you understand the facts of your decisions. And it's tough to do that because, man, we're going to see some huge victory laps here today, right? 100%. You got 20, almost 40 points of follow through here to the downside, right? And the only entry we had systematically was a compromised one. So it's tough to hold it against yourself, right, that you didn't catch this big move if that big move didn't follow your rules. Now, if we catch ourselves in a lot of situations where we're constantly missing the big move, then okay, right, maybe the rules are too strict, we're too intense, or too whatever. And then that's a different question, right? That's a different solution. Wow. I'm impressed, Bears. And yeah, it was a good call to avoid it, right? It flushed right through, didn't find that support. This is pretty bloody here, honestly. It's like this would be the volume you'd like to see on a reversal, right? Like biggest volume of the day. You could argue that this is like a personality changing candle, right? You don't see these kind of sell bars very often this time of day. Kind of catching my eye here a little bit. There's a quote the other day that I saw. I've been thinking about it a lot. But basically, I think it was George Soros. And he basically said, whenever I see a bubble, I jump all in. I'm not a one-man candle trader. I think that's a little bit aggressive. And I wouldn't say that that volume is confirmation volume, right? Confirmation you want increasing relative to previous bar. Yeah, like we've seen a little bit recently. Markets basically give us an overreaction move lower prior to morning data. Where like if you're going to be playing the overnight move, right? Now your risk reward is skewing you for a bounce off of that 8:30 data tomorrow. Yeah, I would need to see bears fail here first to make like a fake out lower or something. It's great volume on the 5. It's great volume on the 10. So you're still getting a lot of reasons to say that quote unquote markets are bearish. My bias is probably to move here lower, to be honest. It's going to flush here. Let's see. Yep. Yeah, and that's exactly the point of the chat, Michael. Exactly that. Look, even when I say stuff, there's gonna be times I'm wrong about what I say, 100%. But it's more about like if you have a question in the moment, you're gonna speed up your learning curve when you get that question answered. So that's really the objective, right? Man, it's one of those days you just go bearish or up huge. It's tough to watch. It's a big fucking move. Yeah, again, I don't know if I missed out on something here today. Like, I think I had a C plus setup. Not quite A plus. And it's frustrating, especially when you get A plus follow through on a C plus look. Oof. That makes you want to pull your hair out. I got a chance here, another one. Let's see. The flush through the low, stop loss would be 52.26. So let's see here. All right, let's see if we can get some follow through here. This thing is starting to fly, guys. All right, so looking pretty sharp on that entry. Shaped up like this, pretty much. in 52, 23, 25. Give us a bit more here. Okay, a bit more. I mean, I gotta take some profit here, guys. So I'm gonna close a quarter off here. Fuck yeah, let's go. Okay, so next target, 52.10, and I'll close the rest of my position there. That'd be quick, 13 points in 3 minutes. Let's go. Okay, a couple points, right? So I'm going to close everything off at 52.10. It's a big move, team. Okay, 2 more points, 1 more point. Come on. Okay, 2 ticks. All right, guys, I'm out. Oh, I got a shit fill. That was a great win, guys. 13 points in 6 minutes. Let's go. Let's see here. So, not bad. Okay, so in at 52.23.25, closed out at 52.15, and then 52.11. I'll take that, 12 points. Nice work, guys, nice work. And Michael, that one I would say is a lot of your analysis, right? When it flushed through that 52.40 on big volume, and we continued to see volume showing up, then it became a good reason to get out. Yeah, it was kind of just like the reasonable area to target a number, right? Gabe, you're a point better entry than me, but awesome move, right? Awesome move. But guys, that was a huge fucking win. Huge win. 10 contracts, 2.5 points risk, times 3 accounts. Net, was that net 9? No, net 8 points. Win? That's awesome. So 10 times 50 times 8 times 3. Oh, I love Apex. Gabe, what was your P&L on the day? Are you out of this trade yet? Man, if you got 10 points, it's pretty awesome. Pretty awesome. Oh, hello, guys. Hello. Holy shit, Jose. Congratulations, man. 6,400 is still epic. So, I mean, yeah, well done. That's a fantastic thing for us to talk about here later. Gabe, congratulations. 2K on a 100K account. You basically matched my performance dollar for dollar. So, fantastic. Actually, you outperformed me by 15% or so. So well done, both of you guys. That was awesome. So, I mean, you definitely could get a move lower here for sure because the volume continues to be very, very impressive. But this was the signal, right? This was the mega volume. This was your indication that bears are there. At this point, we're starting to get very extended here to the downside. That is harder for me to think that I have another 10 or 15 points. So well done, guys. Congratulations on some pretty big days for a few of you. That is epic. Jose, I mean, you outperformed me by 50% on your trade. So that's fantastic too. Guys, big numbers. That is epic. Oh, God, I love this job, guys. Oh, I actually did more than I thought. So on my first chunk, P&L of 2,062.50. On my final chunk, P&L of 3,062.50. Whew. Who knows what time it is now? Oh, I love this job, guys. Oh my God. That is the biggest win of the year by about 50%. Oh, baby. Let's go. God damn, that was fun. Nice work, team. Honestly, guys, really, really nice. I'm laughing, guys. I'm laughing. It's so rare that, well, it's not, I shouldn't phrase it this way. I didn't expect that to be a big one. Let's put it that way. So it was the trade that, you think, okay, this one's not going to be as monster, it's not going to be as crazy, it's not whatever. A little bit later on in the day, a little bit of a slower market, you thought, and it becomes your biggest win of the year. And it came together very quick, so I'm sorry if that wasn't the smoothest execution on my part. But it became just impossible to ignore that volume. Does that make sense to everyone a little bit at least? You guys, I don't understand what I saw, why I was interested. My notes here in my journal: trade, market, flush, breakdown, pre-market conditions, inside bar, and then my comments. Big breakdown here this morning, and got big midday volume to suggest bears were in control. Volume kept increasing as we flushed lower, so I looked for a clean risk-reward ratio. Or clean risk-reward setup. Eventually got about 1 to 5 on the 3-minute time frame and got really tight risk of about 2.5 points, which made this an easy trade. Was green almost right away on a breakdown through that candle's low. I just need to mark down the times here. About 10:36. But you guys are okay with that? If I trade more like that, right? More of those really tight risk reward ratios, are you guys cool with those types of setups? Especially those low risk, right? 2 points, 2.5 points of risk. You guys cool with those? We're still going to rely on the same concepts, right? Candlesticks and volume for confirmation, all these kind of stuff, right? There's nothing different there. But if a trade is strong, right, it should give us multiple points of entry. And I think that's a good example of that. Now, the bigger win here today for sure would have been on that pullback, but I don't know if I got that good volume confirmation. Yeah, for sure. But if we're getting 5-to-1 risk reward, Gabe, we need to be correct 20% of the time, right, to be wildly profitable. So if we can find high conviction versions of that, I think we'll be in pretty good shape. But yeah, I felt pretty good about that, guys. And here's the reason why we were able to take it, right? This 10:30 volume bar was bigger than volume we saw on Friday, right? So that gives us that reason to suggest that, hey, this is outlier price action. This is following our plan. And then I'm trying to not be as stubborn of a prick and be willing to take, I don't want to say flexible entries, but logical ones, right? Because if I have the direction right and I have 5-to-1 risk reward, 6-to-1 risk reward, 20-to-1 risk reward, I'm not going to be getting 20-to-1 comfortably most of the time. But if I can have those combos and I have the direction right, I reckon I can get 50% on that pretty comfortably. And then, fuck yeah, what a day. Guys, literally, we were Jose, right, dude? You were making $1,000 a minute there. Like, god damn, guys. Like, that's like that Robert Downey Jr. money. So it's, yeah, that was fun. That was really fun. So on the year now, 18 and 10, 28 total trades taken, 64% win rate, up nearly 26%. I will take that, team. That was fun. Whew. So who knows what time it is? What's the time? Hell yeah, breakfast time. Hash browns and eggs Benny. Oh. Wow. So, Jose, Gabe, yeah, everyone else who caught this trade here too. Would love to see your guys' market recaps here, right, this afternoon. Talk about your entry, your position sizing, your P&L, how it made you feel. I think those will be really powerful reminders, right, of why being patient is so important. And we didn't quite bottom tick that, but we nailed it pretty close to spot on. So I won't complain about that at all, guys. Oh, I love trading. I love trading. And not to keep tooting my own horn here a little bit, because there's a certain level of euphoria to this, but honestly, guys, I'm very proud that we waited until we saw the volume standard that we wanted, and we got rewarded waiting for that standard. We didn't compromise that trade and get bailed out with something. We waited for things to give us exactly what we were looking for, and when they did, our plan came together perfectly and we got the reaction we expected. So really good reminder of how quickly things can change in this game, how little and how quickly things can come together, and how little we need to make wild money, right? Congratulations, Gabe. Really well done, man. Very, very proud of you. 2K, 2% day. Let's go, dude, right? You do that every now and then, and you're going to be a happy fella. So awesome work, dude. Guys, any questions here? Anything you guys want to go over? Guys, any questions here? Anything you guys want to go over? Otherwise, yeah, I'm going to take off at, yeah, what a day. All right, guys, final call for questions. Final call for questions. All right, everyone. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. But awesome trading day. Glad to hear if you guys caught some mega wins. Congratulations, Jose and Gabe specifically. That's really well done, gents. And yeah, really excited about how things came together here this morning, right? That was a week making trade on a Tuesday. So now, right, we're going to be to a certain extent in capital preservation mode, right? And just making sure that we're not taking any decisions that give us a disproportionate amount of risk, right? So priority number one here, focus on the variables we can control, keep thinking about and waiting for those appropriate volume standards. And then we need to have the patience, right, to wait for high conviction setups to kind of occur. I was definitely not expecting that kind of volume to show up here midday, right? So to a certain extent, I apologize if I misled people or got you guys to jump off the stream because you thought it was going to be a boring day. I'm sorry for that. That's not my intention. But yeah, glad a few of you guys were able to catch it. Mike, nice. What was your entry price? But yeah, guys, today a little bit of an outlier volume bar, right? Middle of the day. I'm not sure if that's one that I could have ever predicted. So that came up a little bit sooner than I expected. So I apologize if I couldn't, or if I was a little bit misleading there. Obviously not my intention, anything along those lines. So I'm sorry for that, if that is the case or was the case. But yeah, that volume made it undeniable and had to start looking for an entry at that point. I'm going to try to do a pretty detailed breakdown in the video if the YouTube processes it quick enough. So keep an eye out for that, but always happy to answer any questions you guys might have around that. And that's it, guys. So if you have any questions, hit me up outside of market hours. Oh, let's go. So he caught a bigger move than we did, Mike. Let's go, dude. What's your profit target here? Mongo? Incredible, Mike. Or Michael, sorry. Yeah, if you want to, when you're close that trade, love that. Send us a nice little daily debrief breakdown with it. Because I'd love to see this. This looks, you're up 14 points here. So you outperformed me on my play. So I feel like I can learn something from you here. Yeah, beautiful. How many contracts did you buy? Love it. Man, take screenshots for you too, right? Write down why this was exactly an A+ look, why you were so confident that that was the right setup, so that when you go back and you look at that trade in 6 months, you're like, oh, I know why I did this. So include all that information. Oh, hello, Michael. So a big P&L day too then, I'm guessing. 4K plus? Yeah, that's a pretty nice move. So, yeah, it's pretty nice, man. 15. So yeah, very, very nice work, Michael. That's awesome. 53 points. You'll take that any day of the week. Or 53 ticks. But yeah, nice work, team. Really nice work here today. So like I said, guys, same deal like always. Hit me up outside of market hours, and I'll do my best to get back to you guys as soon as I can. Otherwise, looking forward to catching up with a bunch of you during our one-on-one calls here later today. I've got a couple slots available tomorrow and Thursday still. So if you guys want to catch up, you want to talk about, how I was able to catch this trade and you weren't able to catch this trade, kind of plug in those gaps. Feel free to book a time slot and we can kind of chat about some of those details. But really nice work out there here today, team. Proud of you all for crushing it. Let's go, Michael. It's pretty good, dude. That's pretty good. So unrealized is like 3250. Your realized is probably about the same. So that's epic, man. 6K day, right? Like we talked about start of the day here. You need one good trade a day to outperform your day job. It maybe 6K isn't quite there, but if you could do that every 10 days, man, who cares if you only get 3 trades a month, right? So it's nice to reinforce that less is more kind of outcome. I think that's huge. All right, guys, we'll see you tomorrow. Back at it again then. And hopefully we can get ourselves some chaos prior to Fed minutes and post CPI. But like I said, guys, that was a great way to start the week here. 3 nice winning trades in a row for us and portfolio at all-time highs. So all things considered, more of the same. We keep stacking up these wins. And yeah, guys, great start to April. Goodbye, March. And let's keep crushing it. So talk to you guys all tomorrow, and we'll catch up then. Peace.